So as of this recording, the Nasdaq Triple Qs is down over 0.58%, and the S&P 500, well, it's down over 0.21%. Now, with the stock market still at all-time highs, a pullback would be healthy. Listen to this.
Now, you have to imagine it's not going to be a straight path up to that point. And I will say that, there are overbought indications. So far, those indications haven't been all that meaningful. And the loss of momentum that we have seen, especially relative to the early stages of that move off the April low, has just really not made a difference, right? So there just feels like this underlying bid to the market. What I think could change that, and only temporarily because we have the breakout confirmed, are mega cap earnings, right? So these mega cap stocks are coming into earnings really, I'd say, coming in hot, right? They have very strong upside momentum for the most part and look pretty overstretched. And so that creates, in my opinion, more of a proof point for them as they come into those reports.
Meaning you better hit your numbers and say something the street likes, otherwise you could see a sell-off?
That's right. And honestly, a sell-off would be pretty healthy in the big scheme of things because it presses the reset button on the uptrends.
So you would feel better if there was actually a reset?
I think so, because it helps the trend not get too steep. Because what happens when you get a very steep uptrend, and arguably we're getting kind of close to that, is that the way it's sort of resolved is in pretty dramatic fashion.
That's the rubber band effect.
And so we want sort of that orderly stair-stepping higher. And that would suggest that we could use a pullback to sort of normalize the slope of the uptrend. We have some indications of that, but they're moderated by the fact that there are so many breakouts and there is a breakout in breadth, meaning that we've seen rotation, even though the mega caps have been quite strong, we have seen rotation that's benefited other sectors of the market.
The sell-off that we're watching, if you look back to April, that was the day that Trump came out and announced the tariffs, and it caught the market off guard. I think since then, the market has figured, look, this is a negotiation. This is part of the art of the deal. We may see higher tariffs, but it's not going to be the highest numbers as advertised. And I realize you're a technician, not somebody who's looking at the headlines that come out along these ways, but how do you take those headlines and try and figure out what it means from a technical perspective?
It's a really interesting tape in that regard, in that there's top-down headline risk. It used to be that it just was individual sort of company headlines that we worried about. Now we have something much bigger than that. So I do care, of course. And it seems like August 1st is sort of a date with the tariff headlines that could change things. So we have these dates in mind. We can't predict it, of course. We can only react to it. So if we did see some kind of volatility-producing event, we will then judge the impact on our indicators, which right now are sort of more neutral short-term and have whipsawed more positive longer-term. If that changes, we're very willing to change with it. And that would, of course, be likely a response of the sentiment and its response to the tariff.
Now, in today's video, let's take a look at ticker symbol SOFI, Sofi, Nvidia, ticker symbol NVDA, and last but not least, ticker symbol NFLX, Netflix. Let's begin with Nvidia, ticker symbol NVDA. So earlier this morning, Nvidia stock was down close to 4%. However, the stock has recovered and is currently down only 1.86%. With that said, Nvidia is currently losing support at 169. If the stock cannot recover and get back above 169, then I want you guys to look for a pullback to 160. And if that level breaks, then look for a pullback to 153. From current price, we're looking at a pullback of over 8%. Now, above 169, Nvidia has resistance at 177 and at 186. If the stock can get above 169, then look for a run to 177. The next stock is Netflix, ticker symbol NFLX. So my recent analysis on Netflix was that if the stock could not stay above 1270, then you guys should look for a pullback to 1178. As you guys can see, we're not quite there yet. We're just 2% shy of hitting that target. Now, if Netflix somehow breaks below 1178, then I want you guys to look for an additional pullback to 1108. From current price, we're looking at a decline of over 8%. With that said, if Netflix stock can recover from this pullback, then you have resistance at 1270, 1316, and at 1361. Let's now take a look at SoFi Technologies, ticker symbol SOFI. Now, if you watched my previous video covering SoFi stock, you would have made a return of over 15%. Listen to this. Above current support, you have resistance at $20 and at $21.50. If SoFi can break above $20 per share, then I want you guys to look for a 15% run to $21.50. Guys, each and every time that I make a video, I'm giving to you guys nothing but the best levels to watch, and it's all for free. With that said, current support for SoFi is going to be at $20 per share. And if the stock loses that level, then look for a pullback to $18. From current price, we're looking at a pullback of over 13%. Now, above current support, you have resistance at $21.50 and at $22.73. Overall, to the downside, I'm looking for SoFi stock to pull back to $18 per share. Alright, if you like this video, go ahead and leave a thumbs up and let's get this video out to more viewers. Also, if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching and I'll see you guys in the next one.